You're watching Beyond Markets, where we bring you up to speed on development outcomes in Africa. I'm Kenneth Igbomor, and thank you so much for joining me on the show. Coming up on the show today, we'll look at the investment climate in Nigeria and find out what to expect as the COVID-19 pandemic rages on. Now, you can join the conversation on social media. Let us know what you think. The hashtag to use is Beyond Markets. You can also let me know what you think. My handle is @Kenneth Igbomor. And now the coronavirus pandemic is expected to exert immense pressure on the global investment climate this year. Global IVI flows are expected to drop well below volume seen during the global financial crisis from a 2019 high of $1.5 trillion, according to UNCTAD. Now, for Nigeria, however, recent reports from the Nigeria Investment Promotion Commission shows that a total of about 5.06 billion investment announcements were made in the first half of the year. And Yewande Sadiku, the Executive Secretary and CEO of the NIPC, joins me now to paint the full picture. Thank you so much for joining me on the show today. And let's start by getting your thoughts on the current investment landscape we're seeing in Nigeria and the new spin that the coronavirus pandemic is adding to it.
A pandemic happens once every 100 years, so many of us will not be prepared for it. It will be the first time many of us will experience it, and it is certainly something all of us pray not to experience again. But the economic impact and the impact on investments, again, not unsurprising. UNCTAD estimate, as you mentioned, is a downward pressure on investments in 2020, 2021. They estimated in March that investments in 2020, 2021 will fall by 30 to 40%. If you look at the numbers in terms of the number of infected and the number of deaths from COVID-19 at that time, they're a fraction of what the world has since seen. So our expectation is that when UNCTAD revise their numbers, that the projections for 2020 and 2021 will be even lower. And the numbers that we've seen in terms of investment announcements in Nigeria reflect that. Having said that, as with many things, even though there are those who have, many sectors, many industries have suffered from the pandemic, but there are also a number that have taken advantage of the opportunities that it has presented. As they say, every cloud has behind every dark cloud, there is, after all, a silver lining.
It's a tough job, definitely, to stimulate investment at a time like this. I understand that the work you're facing is no easy feat at all. But then definitely that's why we trust that you can deliver on the job. But let's first focus on how Nigeria plans to look inwards first at a time like this, because we see that that's the strategy for many countries. And what are your plans to stimulate that domestic investor activity?
Given NIPC's role, given NIPC's advocacy role, we cannot achieve anything without working closely with partners at federal level in the context of other agencies and partners at state level, and without engaging also actively with the investing community. In the context of partners at state level, we've actually just finished a 2-hour session with our partners at state level to discuss the plans for subnational investment promotion. And how we can all better collaboratively work towards driving that agenda. The session had the Nigeria Governors Forum and the NEPSA, the Nigerian Export Processing Zones Authority participate. These are two of the critical partners that we believe that we need to drive the job of attracting greater investment into Nigeria. We also see, as is evident in many countries, given the downward pressure on foreign direct investment, that a lot more expectation is now placed on domestic direct investments. We have always believed at NIPC that domestic investments are important. And in our work with states, we're hoping to deal on a more granular basis in attracting domestic investors on a state by state basis to help drive this agenda of attracting investments into specific sectors and specific opportunities.
All right, Yewande, let's stick to this, since you mentioned the subnationals, and let's try and look deep into that a little. So we've seen that Cardinal State and Lagos State are playing the role of the poster child for investment so far, according to the recent reports that you've put out from your agency. And I would like to know how we can get other states to emulate this trend.
So again, thanks for asking the question. It's one of the things we discussed on the webinar we just completed. There's a lot more investment activity at state level, particularly in relation to Nigerians making investments that we probably are not capturing in our newsletter. And we've all agreed that as these things happen at state level, they feed that information to NIPC. So we can carry it on our newsletter and then record it with the investment announcements that we carry. We recognize that these investment announcements are just announcements. They're not actual investments. But usually you start with announcements before you then follow, before you track, before you support and the like, to get those announcements to translate to actual investment. So it's a good place to start, even though it's not the only place. And in relation to the states, given the fierce competition for capital globally and on the continent, we think it is important that all of us in Nigeria, not only at the federal level, but also at state level, are much ready to receive investors. And that was part of the reason, for the webinar I mentioned that we just finished with the state investment promotion agencies. And we encourage the state's investment announcements to let us know so that we can carry them.
So I was going back to your report and I'm seeing some new kids on the block. They're talking about Kaduna, Nasarawa State and Ekiti. We've seen Kaduna coming so far with about 2.61 billion worth of investment announcements there. Is it a one-off or is it something that we can see this sort of momentum being maintained over the years?
First of all, Kaduna's entry is not a one-off. Kaduna has appeared on the league table before. But to the extent that the announcements cover particular periods, and an announcement made in one period will not be repeated, a state continuing to feature on the league table is a function of continued investment generation activity by the state. And we actually take great delight in seeing new kids on the block because it demonstrates that they're actively working to secure investors and that effort, is translating to announcements, which we can then work together to follow to real investment. So the more new kids we have on the block, the more we celebrate actually.
All right, now let's look at the trends that we're seeing and what are you expecting to play out this year as compared to last year?
We saw pressure on investment announcements even before COVID-19. In the first half of 2019, we tracked $15.1 billion of investment announcements through our newsletter and that we carried in our report for the first half of last year. For the first half of this year, we've tracked 5.06 billion, which is a third of what we saw last year. And the numbers that we recorded last year was materially lower than what we saw in 2018. It underscores for us the need for the work that government is doing at encouraging investors, at increasingly improving the Nigerian investment environment. It underscores for us the need for that work to continue. But it also underscores the need for an agency like NIPC and its partners at state level working collaboratively with state governments to proactively encourage investors to proactively manage their challenges, to proactively resolve their challenges, and get them to not only invest in Nigeria, but to have a pleasant investment experience of Nigeria.
Let's get into the sectors and understand how things are playing out there. We're seeing that finance and insurance sector was taking the lead in the second quarter. And I'd like to know what were the key drivers for you.
So this second quarter report is useful, but it also paints a full picture when you look at the second quarter against the first half of the year. But in the second quarter, finance and insurance took a lead, representing 68% of the announcements. Mind you, in the second quarter, the volume of announcements that we saw is probably the lowest that we've seen since we started tracking this. $250 million of investment announcements in the second quarter compared to $4.8 billion of investment announcements in the first quarter. So a materially lower sum. But the bulk of the announcements for finance and insurance that we saw in the second quarter related to announcements by IFC, the International Finance Corporation, for investments in Lagos.
All right, still on the insurance though, by how much do you think the recapitalization exercise that we're seeing in that space could play in driving investment in that region?
It is the efforts and the actions of government that in many instances stimulates investment flows. I mean, when we look at NIPC, at the history of investments in Nigeria, it is in the years when government has taken bold policy reforms that investors have then reacted with material investments. So if we look back over the last 20 years, the years where we recorded the biggest announcements, the biggest investments, whether it was from the sale of oil assets to indigenous companies, to banking reforms leading to consolidation, and then the telco sector reforms with the sale of GSM licenses. In insurance and in all sectors, I think it is bold, coherent policy changes and deep economic reforms from governments that will drive investor activity.
Talking about bold reforms though, let's look at some of your strategies and how you plan to keep this interest in investors strong.
There are a number of prongs that we think are important at NIPC. Obviously, the quality of the foundation is materially important, the investment climate. And that work is largely driven by the Presidential Enabling Business Environment Council. We also thought it was important at NIPC to look at the quality of bilateral investment treaties that Nigeria has signed to make sure that they can even promote the kind of investments that we're looking to attract. And in that sense, we initiated the reform of all of Nigeria's bilateral investment treaties. And we recognize now that the kind of investments that we want to attract, we use the acronym RIBS to describe them. They're essentially investments that are responsible, investments that are inclusive, investments that are balanced, and investments that are sustainable. We want to make sure that in attracting investments to Nigeria, we don't consider only the profit motive of the investor, which is obviously very important, but we also consider Nigeria's sustainable development goals. And that investments that we attract can take us closer to that objective. We think it is important also that given the limitation of resources that we have at NIPC and that most of us have in reality in life, that it is important to focus our efforts on promoting investments, essentially, to use the term fishing where the ducks are. So we have a number of strategies that are aimed at attracting investments first on a sector basis, but also at building strategic relationships with countries that we consider to be strategically important for investment promotion, to make sure that at the public sector and private sector levels in those countries, we have the right relationships to help us unlock investment prospects. And in that sense, we identified 20 countries as strategically important. I can see if I can remember all of them, if it's useful for your audience. But it's Belgium, Canada, China, France, Germany, India, Italy, Japan, Malaysia, Netherlands, Russia, Saudi Arabia, Singapore, South Africa, South Korea, Spain, Switzerland, United Arab Emirates, UK, and the US. We're not suggesting that these are the only countries we want investments from. We're suggesting that we consider these countries to be strategically important based on empirical work that we did, looking at a number of parameters, including global investment sources and Nigeria's trade relationships. So we think that it's important to leverage this work to better drive what we're working towards at NIPC, which is targeted investment promotion. We think a more proactive style of investment promotion will help us achieve much better results than a reactive style of investment promotion. But that obviously means that we first build the internal capacity to be able to do that, and that's what we've been working on.
All right, there's quite a lot of work ahead for you, definitely. I need you to hold that thought for a second. We'll take a quick break, and when we return, definitely we'll continue with our conversation. I've been speaking to Yewande Sadiku, she's the Executive Secretary and CEO of the Nigeria Investment Promotion Commission. Beyond Market continues after the break. Welcome back to Beyond Market. If you're just joining us, my guest today is Yewande Sadiku. She's the Executive Secretary and CEO of the Nigeria Investment Promotion Council. And we've been discussing and assessing Nigeria's plans to attract investment at this time. Quite a lot. She's been breaking down some of the plans and both strategy reform, policy reforms that they've been having in there. But Yewande, let's get back to your plans. And like you mentioned with the SDGs and how we can strategize on that front. It's 10 years to that point, but I'd like to know which areas that we're looking at as at Nigeria to get more investment in that space.
You must first remember that we're an advocacy agency. So our primary role is to advise government on initiatives that government needs to take to ensure that we are attracting the right kind of investments and to ensure that Nigeria meets her own articulated objectives for investment targets. So what we are driven by in terms of the SDGs is ensuring that the agreements that we're signing and our focus on attracting investments is focused, as I mentioned, on RIBS investments. Investments that are responsible, so they comply with global standards in relation to labor, human rights, environment, corporate social responsibilities, and the like. Investments that are inclusive, so they balance investment objectives, investors' profit aspirations with our need to not only mobilize investments, but create meaningful jobs for our people. We want the investments to be balanced, so a balance of investors' right to regulate the policy space when it is required in the nation's interest. And the final item, the S, is that they're sustainable, that they help us towards our sustainable development goals. So that principle is what we articulated at federal level, the same principle we're preaching at state level to make sure that even at state level, when we're promoting investments, that we consider more than the investor's profit objective. It is very easy to focus on the fact that an investment will make an investor profitable without necessarily considering the value that we as a country want it to add to investors. Of course, we don't want investors to just be profitable when they invest in Nigeria. We want them to be resoundingly profitable, but we just need to make sure that their rights are balanced with obligations that protect our national interest and our attainment of the sustainable development goals.
Still on your plans to attract investors and make Nigeria more competitive, I'd like to know how you plan to deal with the competition and for investors with the rest of the continent when the AFCFTA kicks in.
Yeah, competition is good. Competition keeps you on your toes. Competition stops you from being lazy. But competition doesn't stop what is compelling, about what is the compelling opportunity that Nigeria represents. The AFCFTA, we think, is very useful for Nigeria. It's important that we proactively prepare to take advantage of the opportunity that it represents. There are certain threats, but like I said, sometimes behind every dark cloud, there's a silver lining. But the prospect that Nigeria represents, I think the platform of the AFCFTA, we can use to decisively push that agenda of Nigeria's potential. And what we see in Nigeria, first of all, is the sheer scale of the domestic opportunities that exist for investments, the quality of the talent, which we see not only in Nigeria, but which we hear about in the actions of Nigerians, across the world. The scale of our ambitions and the aspirations of government, and without a doubt, the agility and the adaptability of Nigerians. We believe that for the AFCFTA, that Nigeria represents a sterling access point through which to access the rest of the continent. The size of the market, our demographic profile and the like are important selling points for why Nigeria should be the gateway economy for any investor that is looking to take advantage of the opportunities that the AFCFTA portends.
Are we having those engagement sessions with our small businesses on how to leverage the opportunity the AFCFTA presents to attract even bigger investment and scale their prospects?
Absolutely. There are different government agencies that are charged with different responsibilities. But I know that the the task force on the implementation of the AFCFTA has a number of material stakeholders, including SMEDAN, the agency that was specifically created for the interest of SMEs, but also NASME, the National Association of Small and Medium Enterprises. They were also involved in the decision, in the original presidential committee on the decision for Nigeria to sign the AFCFTA. Then private sector, organized private sector groups in the private sector like NASIMA and the like, and many of the state and regional chambers of commerce are also involved in the work of this committee on the implementation of the AFCFTA. So it is not work that is dependent on only one agency, but work that cuts across a number of government agencies and work that requires the active participation of the private sector. Government negotiated the agreement, but in terms of the implementation, it is actually the private sector that needs to take the lead on ensuring that the opportunities that it portends are fully taken advantage of.
Still on trade, and I'd like you to get into some of the partnerships that you've recently gone into. I understand that you got into a collaboration with the Nigeria Export Processing Zones, and I'd like to know what you can expect from this recent collaboration.
So first of all, I'm not a trade expert. My focus is on investments, but the engagement with NEPZA is to ensure that we better project this prospect of the special economic zones, that we work collaboratively with them towards achieving the objectives for which the special economic zones were established, and that we work with them and states to ensure clustering and through value chain aggregation, that the special economic zones deliver for Nigeria what they were established to do. The new CEO of NEPZA is just getting his feet under the table, but we started a collaboration with him and with the states and connecting him with the state investment promotion agencies early on. So I imagine, in the not too distant future, we will be making announcements that speak to the specific opportunities that we're able to unlock from that collaborative work.
So let's get back to the sectors and the destination for this investment in Nigeria. Yes, we talked about the finance and tech, though, but I'd like to get what your projections are for agriculture and what we can see in that space, because I understand the potential that presents across the value chain.
For the state investment promotion agencies, most of them actually focus their energies on driving investments in agriculture. But I find generally that when we prepare these investment announcements, a lot of the agri-investments we see are domestic, and generally they don't make formal announcements of what they're doing. So they may not be captured in our report of investment announcements to the extent that they're happening. But in the second quarter of 2020, investment in agriculture represented 22% of the announcements, of the $250 million worth of announcements that were recorded in that quarter. In the first quarter, I believe agriculture represented about 4% of the announcements. But if we look across the first and second quarters, that's the first half of the year, of the $5.06 billion of investment announcements that we saw, agriculture represented $230 million. We recognize ourselves that this is not sufficiently reflective of government's aspirations. But as I mentioned, a lot of the investments in agriculture are actually not announced in the same manner that we see investment announcements in other sectors. And we're working on changing that.
All right, then, but let's look at how we can diversify the range of investors that we're seeing in Nigeria. And I'd like to speak specifically to that revised gold strategy that Nigeria is putting up right now and what that could mean for that investment space.
I believe that targeted investment promotion, identifying, to use the expression of fishing where the ducks are, identifying partners that can be beneficial and relationships that are strategically important in attractive investments, and investing the time and the effort that is required to translate those relationships to targeted investments, I believe will materially benefit Nigeria. It is work that we have just started doing on a targeted basis, rather than reactively attending events and only going essentially for many things that we're invited for, but proactively ourselves identifying the countries in the first instance, the sectors and the companies, and then working with our strategic partners to chase those investment opportunities, I believe will deliver material value for Nigeria.
Thank you so much for your time and contribution on the show today. Definitely quite a lot to think about when you look at how Nigeria is planning to get those investors on board. I've been speaking to the woman directly in charge of getting that into play. She's Yewande Sadiku. She's the Executive Secretary and CEO of the Nigeria Investment Promotion Commission. And that's it on Beyond Markets for today. And thank you so much for being a part of the show. Definitely you can catch the show on our website at cnbcafrica.com. You can catch all episodes of Beyond Markets on the website every day at 5 p.m. West African time, and let us know what you think about what we discussed. You can reach me on my handle at Kenneth Igbomor, and for me and the rest of the team, enjoy the rest of your day.